Hello, my name is Raul Sanabria. I'm the president of Baroyeca Gold and Silver. We're a company listed in the Toronto Stock Exchange, and we are exploring actively the most prominent silver and gold belts in Colombia.
Good to have you here. Welcome to London, first of all. And we've not met or spoken as well, so I'm kind of intrigued by the story. Relatively new. What are you, about a year old in your public, guys, but you've been going a little bit longer than that. What's the history of the company?
Yeah, the company as a public company was as a shell with previous projects that was cleaned up, rolled back, and we put the Colombian assets that were privately built over the past 10 years.
By who?
It was a company named Condor Precious Metals,
Right.
was private.
Okay.
We got a big investment of Toronto, Ned Goodman, and we consolidated Santa Ana high-grade silver, primary silver district.
Okay.
And then in the past 5 years, with another group out of Vancouver, some partners with Fort Malabar Gold Corp, and we started developing Santa Barbara, building a pilot processing plant and preparing the project for when the market was, after the downturn, getting ready to ride the wave when the gold recovered.
Right, okay. So relative news stories, there's a few things that people want to understand a little bit more. Firstly, jurisdiction, Colombia. What's going on there at the moment? Because there's a lot of chat in the background about what's going on down in Chile, down in Mexico. We've got problems in Peru, Ecuador. Colombia, to do business there is easy?
Well, in Colombia, I've been there for over 10 years, personally in and out and working private companies and evaluating projects for third parties. I've been VP exploration of some public companies. I've seen changes in government. And I know there's presidential elections coming right now, and people is a little bit scared of what is going to happen. It's going to be a swift. But I don't think that will affect tremendously to the mining industry. It's very hard to change the rules overnight. We have seen what happened in Peru and Chile. But, there's a likely scenario in Colombia. Everything is on the table. But I personally think that not much is going to affect our projects or our way of operating.
Okay, so and mining as in terms of importance to GDP or any other metric for the Colombian government, I mean, there's a history there, but can you do what you want to do effectively? Does it take a little bit longer? Is it a little bit more expensive?
No, not really. I've seen in the past 10 years, I've seen great improvements in the country. Starting from the airport. 10 years it was sketchy to get into Colombia. Now you get El Dorado, all the new infrastructure. Colombia has been investing a lot in tourism, in security, and it has if you go there, you see a modern country. So it's it has rules, and if you follow the rules, you're going to be operating easily, or more or less easily, with all the flaws and difficulties you can find in any other jurisdiction, including Canada.
Right.
So Colombia is not as hard or as different than any other place in the world.
Okay, so that's regular. What about mining law? Is that, again, well established?
Yeah, mining has been changed also over the past 10 years. We went from Ingeo, which was and it all converted into a digital era, and all the files are digital before paper. And they imported the Canadian mining cadastre, the online cadastre, in a grid. So they're getting more and more efficient. They wanted to fast track applications and mining concessions, and the processing times are we have seen experience like a shortening in time. In fact, we got the Atocha title transferred to our name in less than a year.
Right.
So
that's way more transparent. And obviously, I think we've spoken with the Mexican government trying to do the same thing. Haven't got there yet, in the hope that it would stop any kind of funny business. There would be because it's open and transparent. So that's working in Colombia now. Brilliant.
Yes.
Okay.
Yeah. Now everything is online, is on real time. So
fantastic. Okay, cool. Let's talk about you. What's your background? What have you done?
I'm a geologist by training. I've been in the mining industry for the past 20 years. I've lived in Vancouver for the past 16.
Right.
I've been VP exploration, president, CEO of a number of junior companies.
But doing what? You're now CEO, right? Is this the first time you're CEO?
No, I've been CEO of private company,
right?
President of public company, VP exploration, director of several public companies.
Okay, so you understand the process. You're not learning on the job here.
No.
Right. Okay. Who's supporting you? Who else do we need to know?
Well, we have special advisor John Robbins from the Discovery Group of Numbers. Yeah, he was with us from the beginning. We got Highwood. We got several high net worth individuals, part of the group or their clan, supporting this company. And then in the past year, we raised in excess of $7 million just with word of mouth, because we haven't promoted the company until now.
And money from where? Like Canada?
Canada.
Okay, fine. Sorry, I mentioned Discovery Group because John Robb, his reputation precedes him, and we've had lots of their companies on here. So what precisely is he going to be doing for you, or has he been doing for you?
Well, he has been very active as an advisor to the board. He is not a director yet because he's overboarded with other companies. Was as everybody knows, with the sale of the Great Bay Resources, was the deal of the century, the deal of his lifetime. But he's very active. He has been to Colombia twice. He was in November and in January both during the process of the sale of the project. So it's very, very interested in this company, very active. And the whole goal will be to develop a long-term plan for an exploration or mid-tier producer in the country. That's on the table as well.
Okay, and tell me about the corporate structure, because it's a small company, right? Early days, small company. What's the kind of share register look like? If there are any sort of larger players, who are they?
The structure still is very tight. We got 52 million shares out. Yeah. Only that. 2 weeks ago, because we know the market is collapsing as we speak, but 2 weeks ago we were trading at 50 cents. We got a market cap of $27 million. Now we're around 19. More than 50% of the shares are in good hands. Management owns more than 20%. Okay. And vendors, which part of them is management, and is about 30% of the current float. So it's all very tightly held. Okay.
Yeah, that's not bad at all, actually. We better talk about Atocha. That's kind of flagship. You got two projects in the portfolio, but that's the one that you want everyone to focus on. So tell us a little bit about what you're trying to do there, because there's a slight outlier in the sense you've kind of got this kind of lab or pilot plant or whatever you want to call it. So sitting on the side here, again, for a company of your side, it's kind of unusual. So I'm intrigued by that. But tell us about the project proper first.
Yeah, Atocha is our flagship property. Actually, Colombia is very well known for gold production, high grade, copper, coal, oil and gas, but never in silver. Silver has been always Mexico, Peru, Bolivia, even Argentina, but never Colombia. But Colombia has a dormant district with very rich colonial history from the Spaniards and the British in the 1500s, 1600s, up to last mine closed in 1902. Okay. Colonial records from the Spaniards, so you can check. They were producing concentrates up to 17 kilos per ton silver. Kilos, not grams. And there's a very good record of the Frias mine from 1890 to 1902, and they were producing about 10 kilos per ton silver concentrates, hand sorting the ore. So that is being proven with drill core. There's some neighboring companies doing some drilling. I did some drilling on the colonial mines back in 2012, and we got intersects 1.5 meter to 3 meter width, vein widths, real thickness, over a kilo per ton silver. So the Atocha in our area, which is a district scale property, is big enough. It's 2,600 hectares, about 6 by 5 kilometer, almost a square block, and it has a structural corridor that runs right through it. It's very well constrained, the structure within the property. And we got a serious number of veins. So we got like 3 corridors with multi-veins each. And in the 30-40% of the property we have explored, we have connecting the dots. We got in excess of 30 kilometers of vein strike length already defined.
Right, but these are super high grade, but very narrow, right?
No, not really. They can blow up to 6 to 9 meters. Right. I've seen them in the Porvenir in the south. Right. And actually our whole...
That you've drilled?
In our property, I think was our whole 10 or 11, we hit where the vein was bigger, and we got up to 6 meters wide. Okay. So the veins go from less than half a meter, obviously, but we can say that average like 1 meter. Right. But with those grades, they are perfectly mineable, the structures. Okay,
in terms of dilution, you're not concerned about?
No, when you get like several parallel ones in short distance, then you're not like targeting one, you're targeting a system.
Multiple, and there's layers.
It's a shear zone.
It's a shear zone. Okay, fine.
Reactivated.
Okay, so a few things you said there. When I'm talking to small companies, I always go, right, okay, how are they going to come out of this? Okay, you talk about district-wide potential. District-wide potential requires capital. So you've got to systematically, you've got to have a process and a plan. So here's how we're going to systematically work our way through that, and obviously increasing the difficult in the current markets for everyone. But you've got to show you've got a route to be able to, monetize that district-wide capability, right? So what's your plan? Where's the money come from?
We completed the financing about 2 months ago. We announced for $3 million. We oversubscribed to 3.2. Sure. So we have about $2 million in the deal. We just signed up for a 5,000 meter drill contract that we are drilling at Atocha again. Drill is moving as we speak.
It's $2 million. It's 5,000 meters. District requires a lot more than that. So tell me through the systematic process you need to do, because lots of companies find themselves in this position, and it's a question of, they've got to spend money smartly, do things efficiently, and be able to tell stories to the market. Do you know what I mean? So it's a balancing act.
Exactly. So when we drill our first target, we're doing really shallow drilling. Right. Our first 13 holes were only 1,500 meters. So an average of 100 meter holes, and then we want like several intersects in every hole, which is what we accomplished. Where we are now, we want to do the same thing. We want to target the shallow part of the veins, cover a long strike, a large distance, so we know the system, how many veins for how long, and then on phases 3 and 4, we can go down deep. But the problem is so big, we have so many targets, we don't even know which ones are the best. So the ones are like better looking at surface, they might not be the best ones at depth, and vice versa.
Right, but that's the difficulty, isn't it? It's like right now, at this stage, this phase of your growth, the company's growth, you've got to get the best possible results. You've got to maximize the chance of putting out the right kind of headlines for a predominantly retail audience who get excited about that stuff, right?
Oh, correct.
Or you try and do things properly geologically, which maybe is a better way to do it. So it's a tough, as I was saying, this dance that you have to do.
It's a combination. What we are not doing is prospecting with a rig.
Okay,
that's what we are not doing. We're doing like a lot of mapping, prospecting.
Right.
We put a press release last week with the soil survey, and we got an anomaly 200 by 100 meters at 3 grams per ton at surface in soils.
Right. On
the overprint of the gold system. Right. And then by expanding the soil survey, we found another vein. So we got like 4 parallel veins where we're actually drilling now.
Okay.
So so we have a plan. We know the structures. We know what we're hitting. We're not going to miss in any of these holes. And then we will keep expanding. Now, our approach in exploration also, we have in Santa Barbara, in the other gold project, there's a different approach. We're not doing drilling, we've been drifting, and then that property can generate cash flow by bulk sampling. So, so that's a different
approach. Talk to me, because then that's non-dilatory activity. That's good.
That's different. I know other companies that what they're doing is they're refurbishing an old mill or reprocessing tailings from a previous operation. Right. That might or might not work, and they will self-fund. What we have is a custom-built pilot processing plant. We have
you built it, or someone's built this thing for you, and you spent how much money on it?
That was the private side of the company before taken over by Baroyeca, and I was part of that company. I was the president of the private company doing that. We started that process 5 years ago with that vision.
So who owns it?
Now it's Baroyeca's.
Right. Okay. So it's been rolled in.
It's rolled into Baroyeca. So the Santa Barbara project has high-grade veins. They all average about an ounce per ton gold systematically, consistently. We were starting with a 150-meter tunnel that we drifted, and then we were collecting samples 10 tons at a time. So like a giant drill hole.
Right.
So we were advancing. When we get like a nominal 10 tons, we threw it in the plant.
Got it.
It was like a giant lab. We was crushing, milling, homogenizing. We got a head grade. And all of that for 500 ton. We did a 500-ton bulk sample. It's not a 1 or 2 that we sent for metallurgical testing. We did the extra mile. We were thinking big. Average 24 grams per ton. That includes some dilution of the wall rock. But when we channel sample the veins, it's 1 ounce per ton. Okay. So the tunnel, we did a crosscut, and 25 meters parallel to that, we found, well, we knew there was another one. We hit that. We drifted 10 meters in each direction, channel samples every meter, average 1 ounce per ton.
Right.
And that material can be processed at the pilot processing plant. So when we do you did your math, 500 tons at 20 grams per ton average, it's 10 kilos of gold.
Yeah.
So that gives you $1 million US that you can deploy in exploration. So we can keep doing that.
And can you? Does this thing, because you've got to explain to people why employ that rig. Does it just wipe its nose, but it gives you some data? Does it wipe its nose and you can deploy exploration capital elsewhere? I mean, how beneficial is it to you? Because it's not a business in itself, is it?
Defrays all the operation costs. Defrays, because our operations are in Colombia. Our talent is 100% Colombian. We invest in Colombian people. We don't have an office in Vancouver. We don't have a team in Vancouver. Okay. Everybody's in Colombia. Then the cost is lower. Production will cover all the overhead of the company down there. And the exploration on Santa Barbara will be for free. And, actually, that exploration, the tunnel gives more information than drilling. Imagine the cost of a 200-meter hole to hit a 30-centimeter vein. Right. When you're drifting through the vein, you can channel sample every meter. And then you collect the sample. Between a drill hole and a drill hole is geostatistics. Right. And then if you hit the quartz part of the vein or the rich part of the vein, you get negative effect. But in this case, the best sample is the entire sample. And we are collecting the entire sample. That's what I meant about the data. So that if you're building a data set, which then leads on to a bigger plan. Because I say running that model in itself isn't a business model. It's a small bit, right? But the data it gives you allows you to plan for well, hopefully something like a resource estimate, the distribution of the grades within the chute, etc. So it's genuinely for free. When you say we're doing that for free, that stands on its own 2 feet. The exploration on Santa Barbara on those 500-ton bulk sample costed the company $0.
Cool.
So that's the balance sheet, exploration for free. If we ramp it up, then we can cover exploration, like diamond drilling, or even exploration on Atocha.
Brilliant. So let's take this, let's focus on that for a bit, and then we'll bounce back to silver in a second. So the next 12 months for that part of the operation, that part of the business looks like what to you? I mean, what are you sitting with at the end of this year? You've got a massive drill program, which you might have been able to fund, but are we anywhere near some kind of study?
We are now looking at mergers and acquisitions.
Okay.
We are evaluating an opportunity, which is a third project that we might incorporate in the company.
Colombia.
In Colombia as well.
Okay.
That one comes with the team in place, and so that's will come with some funding if we do that, because it will be interesting in other groups to participate into this opportunity. We can consolidate that.
So it's a different. Is it a public company at the moment?
It's a private company that has an asset, but we're evaluating. So there's nothing on the table. There's nothing firm yet.
Right.
But there's a likely possibility we're looking at that opportunity.
So
as well.
that comes with money because that money's sitting within a private entity, or if you roll it into your asset, someone will fund you.
It is a private company that has some cash and has the asset. So we're looking at a possible merger, and we have to evaluate that. But so so that's a possibility we're looking at. We're looking at staking more ground because we want to be also project generators. We want to be also expanding our footprint in the country. We are also looking at maybe raising more funds in the future, but so far we don't need. What we want to get is Santa Barbara to produce as a small operation while we conduct exploration, not just a cash cow. But it could be a cash cow opportunity at the same time that we're increasing the size and the number of bulk samples to be run simultaneously.
Okay, interesting.
So that will create 10 million bucks, 5 million bucks.
When you're ready.
Yes.
This side of Christmas, you think, maybe?
We're working on the permitting to upgrade the capacity of the plant. Okay. That's actually been happening. Yeah. So if we have it by July or August, we're happy to turn the key again. So the plant is operational.
Interesting. Very interesting. I like that. Ambitious.
Different.
And different. Yeah. Let's go back to silver. Okay, so silver obviously markets. Well, how would you describe the silver market at the moment?
I always like silver more than gold. So that's something that I've been doing for the past 10 years.
But gold price is quite nice. Most people are kind of happy where gold is. I know they want it to 2,000, 3,000, whatever. But if you're a producer of gold, it's a great price. But silver, what's happening? Silver
has the industrial mineral component, part of the monetary component. So when gold performs, silver outperforms. And vice versa. Right. So in a bullish gold market, silver will outperform. But now with all the EVs, solar panels, I've been listening to presentations here at the conference, and there will be like a 200 million ounce shortage in the short time. So someone has to find those. Yeah. So we need primary silver projects because silver has been byproduct of other mines. But we're in a shortage of physical silver because it's full of gold. You want to buy gold, there's gold everywhere. But there's no physical silver because of that industrial mineral application. Right. So we need to find 200 million ounces between all the juniors, all the companies that are around. Yeah. I want to be one of those.
Sure. So if I look at money situation, I know you just raised some money, right? You obviously raised enough to do what you feel you need to do. If you're looking at M&A and that sort of thing as well, I guess you're going to have to give us a clue as to the sort of deal that you're looking to strike. Lots of companies come and say they're taking M&A. So if you are, does that kind of help us inform the type of business that you want to be? It's Colombia focused, get it, gold, silver. Are we sticking with precious metals?
Precious base metals, but mainly precious metals. So there's opportunities for copper. We know where there's some copper in Colombia as well. Colombia is being hot. There's other companies that's putting also massive copper, silver deposits in the map. So Colombia it offers that opportunity. And what I like from Colombia is only 5% of the territory is covered by mining concessions, not mining applications that will make for 15, 20% of the country, but there's only 5% of the country. And in that 5% has been world-class discoveries in the past 10 years, more than 50 million ounces of gold. Imagine what it's in the rest.
Yeah,
it's underexplored. So the way the mining cadastre is evolving, the mining agency is improving and getting more digital and efficient. In a short period of time, we believe that we might be in an advantageous position because we know the country, we know the geology, we got the in-country experience, we know the projects, we know where to look for, and the know-how is important. The know-how. So we're open to everything via Baroyeca, or we can find other deposits and spin them out. What prevents us to doing that? And being a project generator, we can JV projects out. So everything is on the table right now. We're building this company from small steps at a time.